Today was another rough day in the markets for CleanSpark stock. It was down 4% on the day. Year to date, though, it's still up basically 7%. It doesn't feel right, though. It feels like CleanSpark should be up much more than this 7%, even though Bitcoin's only up 1.6% year to date. So we're technically trading at a 3x multiplier to Bitcoin's price action. But I think it's been painful because over the last year, CleanSpark stock is down essentially 40%. And when we compare that to an Iron, they're up 89%. Iron's another Bitcoin mining company out there. Year to date, Iron's up 24%. So that just rubs extra salt on the wounds of CleanSpark shareholders. In this video, I'm going to be talking about why CleanSpark stock hasn't been going up. And I'm going to be talking about what I think the future holds for CleanSpark stock. If you are new here or returning, not yet subscribed, please subscribe down below. I love seeing all the new faces pop into the YouTube channel. You guys know at this point, probably unless you're new here, that I am a large CleanSpark shareholder. I was fortunate enough to buy a lot of CleanSpark stock around $2 per share in two different bunches, once in 2020 and a second time in 2022. So it's grown into a massive position in my portfolio, but that doesn't mean I'm not disappointed right alongside you guys. I guess to start this off, I want to explain something to you. And I think this is going to make sense to most of you because it's just kind of the investor that I think I attract to this YouTube channel. I myself am a contrarian investor. I believe in, and when I say I'm contrarian, it means that I generally go against what is popular. Contrarian investors view what's popular as a risk. They view popularity in the stock market as potential risk. And they view the opposite, unpopularity, as opportunity. Now, that's not saying that everything that's unpopular in the stock market is an opportunity, but we believe that opportunity lies in what is unpopular. So, you look at a company like Iron, they have a Bitcoin mining business, and they also have an AI HPC business. I'll be diving into that topic a little bit in today's video, but the bottom line is if you don't have any exposure to AI as a company right now, you've been out of favor in the markets for the last year plus. And that's been a shame, and the contrarian investor in me actually gets excited about that because you can follow what's hot in the markets. You can follow what's popular in the markets with your own money for a long time, for quite a while, and you'll do just fine. But eventually, popularity grows so big, there's enough people that hop on that bandwagon that bandwagon eventually breaks down. It busts. And I've seen that time and time again. I've been investing legitimately now for 6, 7, 8 years. I'm only 23, almost 24 years old, but I've had a passion for this for a very, very long time. And I've seen this play out time and time again. Usually it's the contrarian investor that ends up on the right side of things. Now, being contrarian, though, is extremely difficult because, again, we just look at the stock price performance, just comparing Iron to CleanSpark over the last year. It's painful. But being a contrarian means that you have to have incredible patience. And you can be proven wrong over the short term until that bandwagon does break down. You also have to have the ability to back your own conviction in something because you're out on a limb. Being a contrarian means that you're going against what everybody else thinks in the markets. You're going to be called dumb. You're going to be called stupid. People are going to tell you don't know what you're talking about. And the evidence that you see visually when you look at your stock compared to an Iron, for example, is painful. That too is telling you are wrong about your conviction in a company like CleanSpark. Now, the thing that investors don't understand if they're part of that popular crowd and they're not a contrarian is, well, I'll phrase this a different way. I don't think they underestimate the market's ability to discount something. They underestimate the market's ability to price something in. So we have to ask ourselves today, as we're sitting here, what's the date today? February 18th, 2025. We have to ask ourselves, what market outlook is priced into the markets currently? What outlook is priced into the markets currently? And that's not necessarily the answer. The answer is actually, how does your view of the future compare to what's currently priced into the markets? And in my personal opinion, and I'll walk you through my numbers and my reasoning here, My view of the future is much different from what the markets are pricing in today. Much different. I put out a video on Iron just the other day. If you want some more background on my thoughts about this company, go watch that video. Click the eye in the top right-hand corner. But I don't think there's any better way to really get into this video outside of reading you this tweet. TJ the Wheel Deal. A lot of respect for this guy. He's made a lot of money. He's a very smart individual. He said that CleanSpark diluted to the tune of 75% in 2024, in case you guys are wondering why the stock isn't mooning, why it isn't going up. And that's true. They diluted 75% in 2024, which is a lot of dilution. He says it will take a while for the market to believe them that dilution is over and that they are fully funded to 50 exahash per second. Yeah, if you guys aren't aware, CleanSpark doesn't even have an active ATM dilution program anymore. They ended it because they are fully funded to 50 exahash per second. I'll skip the rest of his tweet because that's kind of the basis of it. But my reply to this, I think, is so important to understanding what really has been going on. I say dilution could be part of it, but just as comparison, Iron, the top performer of the sector, had 200% dilution over the same time period. That compares to CleanSpark 75% dilution. Iron had 200% dilution over the same time period and currently has an open $1 billion ATM program. And if you watch that video that I posted on Iron, you'll see that they are reliant on this $1 billion ATM to continue to grow and fund their CapEx at the company. They are now out of cash on their balance sheet. But again, the markets really they're looking past that because of what I say in the second part of this tweet. It probably has more to do with what's hot, which has been AI. Investors that want exposure to Bitcoin mining now have the ability to get AI exposure too for what they believe is at no additional cost. Knowing how AI stocks have traded, why would you buy a pure play Bitcoin mining company when you can get AI on top of it for free? And I think this is the biggest point. The markets right now, what's popular, what's hot is AI. And investors all over the place are chasing AI, even though there's very little see-through to any true ROI, return on investment, for the hundreds of millions of dollars that companies are plowing into AI. Now, that's not to say I'm not a believer in artificial intelligence. Just this morning, I went out and bought Symbotic. I've been buying one-stop systems, two plays in the AI space that I think actually benefit from what's going on. But their share prices aren't reflecting that. You know, what's funny is the AI companies that are seeing their share prices rise so much, outside of NVIDIA, they really don't benefit that much immediately from AI. It's really a guessing game as to the ROI they might see as a result of all of this AI spend. Iron, for example, and I'm not trying to hate on Iron, they're just the top performer in the sector over the last year. So that's why I'm using them as an example. They have plowed hundreds of millions of dollars into HPC and AI services, yet they have a single-digit revenue run rate on their HPC AI business. So your ROI on all of that CapEx, that's going to take years for investors to see a return on. And they have a distinct lack of growth in that HPC AI business currently. And that could be from a multitude of reasons. This is just one area of the overall AI space that I'm focusing on here. But there's plenty of other areas out there too where the ROI really isn't clear. And the markets get blinded so easily when a trade is hot and when a trade is popular. You know, I've been called uneducated. I've been told that I'm not being truthful with my audience. I've been told that I'm writing things in bad will, or I'm saying things in bad will, just because I'm not fully on board with the AI train here. Now that's also what makes it hard. I'm on a long and lonely road. That's what a contrarian investor is. You're on a long and lonely road. You're truly out on a limb. You're disagreeing with what the markets are pricing in because you view the future very differently. And the markets probably have already priced in a lot of this AI growth for the future. Now, I will say before I go deeper into this video, it's very difficult to be a contrarian investor, but that's when I would suggest you check out my monthly membership. I don't mention it very often, but we have a lot of like-minded investors in our membership, in our Discord server, over 300 people now, growing like crazy. But if you want to hear If you want to be a part of a group that has a similar mindset and similar thinking to you, I would highly encourage you to check out the membership. It's one of the cheapest on YouTube, and you get my buy and sell alerts, you get extra access to my brain, my macroeconomic analysis. Everything you want is included in that, and I have a 100% refund policy if you don't find value. So hit the join button located right next to the subscribe button if that interests you, or hit the Patreon link in the pinned comment. But let's go deeper into this video. Another reason CleanSpark stock has struggled to appreciate in value is because of this. And this was actually just announced today after hours. MicroStrategy, they go by Strategy now, announced a proposed private offering of $2 billion of convertible senior notes. I made a video about this a couple months ago now. It's my best performing video ever, explaining why MicroStrategy's convertible notes actually hurt a pure play Bitcoin mining company like CleanSpark. And I'll explain that again briefly here. This debt yields 0%. Literally, the debt holders here get 0% return on the debt they buy from the company, or the money they lend to the company. 0% return. You might ask, why would people give MicroStrategy money for free? Well, it's because MicroStrategy issues them a free call option on MicroStrategy stock in lieu of those interest payments. So essentially, because this is a convertible bond, the debt can convert into shares of the company at a premium, which is a free call option. Essentially is what's going on. Now, obviously, there's significant downside risk here still, because there is a 0% interest rate. If MicroStrategy stock does not appreciate a lot in value, in 2030, when these notes become due, well, these debt holders, all they're going to be returned is their principal. They're going to be returned their $2 billion with 0% return, which is a massive, massive opportunity cost. If you have 0% return over the next 5 years on your money, even you could even just buy a 5-year treasury bill and yield 4% on your money. That's a huge opportunity cost here. So what these debt holders do to hedge that downside protection is they'll actually short sell any sort of Bitcoin exposure outside of MicroStrategy stock. Because if they would turn around and short sell MicroStrategy stock itself, they would actually be hurting their chances of that free call option being executed profitably, because they're putting negative selling pressure on the stock of MicroStrategy. So these debt holders actually go out and they say, bingo, CleanSpark, a 100% pure play Bitcoin mining company. If Bitcoin goes down, CleanSpark stock will go down. We will short sell CleanSpark stock because that'll be our downside protection for our convertible notes on MicroStrategy. And if Bitcoin goes up in price, well, we're gonna make out like a bandit on our convertible note, on our free call option that we just got with MicroStrategy. That's kind of the arbitrage play that's going on here. And there's been a lot of convertible debt that's been issued by MicroStrategy over the past, I'll say, year. It's actually been a couple of years. Now, I've also attacked this head on. I think there are lots of holes with MicroStrategy's playbook here. I won't go into them in today's video. I'll save that for another time. I'll probably have a video out about it, I'll guess, next week. There are holes here, though. And just keep that in mind. This is another one of those areas of the stock market where there is a lot of euphoria. There's all this, to summarize what my video is going to be about. It's that money for this sort of stuff is not unlimited. And MicroStrategy's most recent convertible note offerings are now underwater, which makes it even more difficult to issue new convertible notes to continue to buy Bitcoin. Even more importantly, and I'm going down the rabbit hole, but I promise I'll stop soon. These are unsecured obligations of MicroStrategy. So yeah, technically, they don't have any assets that back this debt. Now, obviously, if you're lending money to MicroStrategy, who has a money-losing software business, you probably don't want to secure the debt because you're not securing the debt with any assets that you would necessarily want that are accretive, that create value. So you actually have better terms for yourself as a lender if you have unsecured debt for the company. That's why they do that. But again, if the price of Bitcoin were to fall, in order for MicroStrategy to repay this debt, they would probably have to sell more Bitcoin then the proceeds allowed them to buy. So today they're buying $2 billion worth of Bitcoin at $100,000 per coin. If they're forced to sell Bitcoin at $60,000 per coin, they're going to sell more Bitcoin than they actually bought with these proceeds, that's a massive problem. And again, have we not learned from the great financial crisis? Have we not learned from that? I mean, unsecured obligations at a money-losing company is essentially doing a debt deal on a handshake. They're taking MicroStrategy's word that we promise we'll pay you back. That's all it is. And that is extremely dangerous. That's exactly how the great financial crisis played out. But I'm going to end the MicroStrategy tangent there. You guys kind of get the area I'm going with that. But moving back to CleanSpark, it's not all bad news. It's not all bad news. You have MicroStrategy, you have AI being hot, pulling money, both of those things, pulling money away from potential buyers of CleanSpark stock. Yet, we can look at institutional ownership of CleanSpark and see that it has climbed to 60% ownership. 60% ownership. That is insane. Out of all of CleanSpark's total shares outstanding, 60% of them are held by institutions. So you might be asking, okay, and there's a chart here that shows us actually. You might look at this chart and see, wow, institutional ownership has increased like crazy over the last few years. But why hasn't the stock price followed suit? Well, that's what a dark pool is. A dark pool is essentially a private stock exchange where you have privately negotiated deals because these institutions are wanting to buy millions of shares of stock at a time, and they're going to do that privately in a dark pool so that they don't actually impact the public share price of the stock and end up getting a worse deal for the shares they want than they would if, they signaled to the markets that they're buying stock on the public exchanges. So by definition, dark pools do not impact the public share price of companies near as much as, if these shares would have been bought on public exchanges. And that's just kind of a small downfall of a dark pool versus public ownership. Now, you can look at this and also understand that, okay, if all of this money is coming into CleanSpark stock, even if it's coming in via a dark pool, clearly big money, smart people here see value in the company. They see value in the company. And I think I get Wall Street research reports sent to my email inbox pretty consistently. I share those with my members as well. So again, join the membership if you've ever considered doing so. Make this the time you do it. But there is tremendous value in CleanSpark stock. I'm going to switch over to my Excel spreadsheet here to show you this. I know the screen's dark. It'll pop up here for you in a second. What is CleanSpark's trump card? How do they get their stock to start appreciating like it should again? First of all, in order to combat the short selling pressure, the best thing they could do is start a share buyback program. They actually did repurchase some shares when they issued their own convertible bond not long ago. But as their Bitcoin mining margins continue to expand, the CFO in the recent earnings call actually discussed it. He said he would love to return capital to shareholders via share repurchases over the long haul as their margins continue to expand and their net incomes continue to grow. That's a key point that I think a lot of people are missing. That will offset lots of short selling pressure that's coming into the stock. Now, the bigger trump card, in my personal opinion, for CleanSpark, I've talked about this briefly in the past, is their HODL balance. As of today, they have basically 10,500 Bitcoin sitting on their balance sheet, valued at roughly $1 billion. They have $1 billion worth of Bitcoin on their balance sheet. Absolutely insane. That's incredible because, and this is another opportunity cost that I don't think the markets are seeing. This is where my future varies from what the markets are discounting currently. I believe strongly that as a result of that HODL balance, CleanSpark will start to be able to earn a yield on this asset like you can earn yield on basically any asset in the world. That could be by providing liquidity to exchanges. It could be by providing liquidity to ETFs. It could be by buying covered calls and maybe cash secured puts, maybe selling puts, utilizing the options chain on Bitcoin. protecting your downside exposure to Bitcoin itself. CleanSpark in the future, and they've started to talk about this as well, will be able to earn a yield on their HODL balance. Let's say that Bitcoin itself stays stagnant at $100,000. By the end of this year, CleanSpark should have 18,000 Bitcoin on their balance sheet, just based on the amount of Bitcoin they're mining every day. That would return shareholders an extra $72 million. That's $72 million that's going to the bottom line. Just with a 4% yield on the company's total balance. Let's say you don't think they get 4%. Let's decrease this to 1% yield. That's still $18 million going to the bottom line for the company. And you can see as the total balance continues to grow or the price of Bitcoin continues to go higher and higher, they will be returning hundreds of millions of dollars, more than likely, to shareholders in the coming years via yield on their HODL balance. This is a massive opportunity cost to the companies like Iron that are plowing hundreds of millions of dollars in CapEx into the HPC AI space. We talked about how the ROI see-through for HPC AI just really isn't there right now. They keep saying they're going to sign massive contracts, yet the contracts don't come. They have a single-digit revenue run rate for their HPC AI business, so it's going to take years, a decade plus, for them to see ROI on their CapEx spend on HPC and AI. And that's not even considering the fact that as of now, it looks like with every new NVIDIA GPU that gets released, they're going to have to build a new data center because old data centers don't have the proper rack density to house those GPUs. Iron is going to spend $300 to $350 million on a new data center just to have the proper rack density to house NVIDIA Blackwell GPUs. I mean, that doesn't sound like a very smart business model to me. So the markets can chase this all at once, but eventually ROI and profitability matters. It always does. It always does. And this is a massive opportunity cost because CleanSpark can see this HODL yield on their Bitcoin balance without any additional CapEx. This is truly 100% incremental income that will go to the bottom line of the company. What can CleanSpark do with this HODL yield? Well, yeah, they can choose to buy back stock. This will offset all expenses at the company. They will start to have retained earnings. Shareholders will start to see ROI. This is a huge future for the company. And the most common argument we get out there, at least I get out there, is, well, that doesn't mean the companies that don't have a HODL balance can't start one tomorrow. Yeah, I agree. They could start a HODL balance tomorrow, but you know what? If they start a HODL balance tomorrow, they don't have 18,000 Bitcoin sitting on their balance sheet tomorrow. They have 20 Bitcoin sitting on their balance sheet tomorrow. And it gets harder and harder as time goes on to stack that Bitcoin on the balance sheet. And that means that any yield they could get on their HODL because they're late to the game is going to be significantly less than this. And, I'll go even further. Another common argument is that, well, if Bitcoin ends up succeeding a lot and HPC AI really does fall through, then a company like Iron can just convert all of its data centers to Bitcoin mining. They can take out their GPUs and put Bitcoin mining rigs in. True, that is, again, very true. But again, that's representative of a failed management team. That is representative of hundreds of millions in CapEx that failed in the HPC AI space. That's hundreds of millions of dollars that were wasted. Shareholder money that was wasted if that's the scenario. So any way you slice it right now, if we look at profits in the future of CleanSpark and this industry and the market, the true ROI is not being respected. It's not being respected. And that's for several reasons that I laid out in today's video. But again, I think at a certain point, this will matter again. And I've seen this play out time and time again. And if you don't even want to go to those edge case scenarios, we can even say, okay, let's say HPC AI, it succeeds. Well, in order for that to be a better business venture than Bitcoin mining and in a HODL balance, their HPC AI has to return shareholders more money than this HODL yield will return for CleanSpark shareholders. That is a tall order, even if HPC AI succeeds. That is a tall order. Now, the caveat here is CleanSpark has yet to actually deliver yield on their HODL balance. This is something that is just now starting to develop. It's starting to become a reality. They think that this year in 2025, they'll start to earn a yield, but this is really going to be 2026 and beyond. So if you're not doing your homework and you're not doing your research and you're not thinking for yourself, you're going to miss this. You're going to miss this. And again, that's what being a contrarian investor is. This isn't popular right now. You're going to be called dumb. You're going to be called stupid. People are going to tell you don't know what you're talking about. But in the end, you could be very well correct about your investment thesis. And this is where I'm at today. If you guys see holes in this, please let me know. Again, if you're new here or returning, not yet subscribed, please subscribe down below. Don't forget to check out that membership. If you are a contrarian investor like myself, we have a lot of like-minded individuals in that Discord server. I think you're going to highly enjoy it. You're going to get a lot of value out of it. If you don't, again, I have a 100% refund policy. But yeah, with that, guys, I hope you have a great rest of your day. Hopefully this video gives you some clarity about my thought process with CleanSpark. I think the future is very, very bright. I didn't give you a price target today because I don't think it really matters. Right now, I believe, based on my research, CleanSpark is tremendously undervalued. And I think over time, the market's going to start to respect what it should respect. And they're going to start to demand ROI on all of this CapEx going into HPC and AI. And I think eventually, MicroStrategy's convertible bond, the negative selling pressure that's putting on CleanSpark stock is going to kind of peter out eventually. I just think the future is very bright. And I'm not somebody that has to check my portfolio every day. I don't. I really don't. And I would encourage everybody else to do the same because that can be very misleading. That can make you make mistakes. But again, I've talked long enough. Hope you guys enjoyed this video. Stay blessed. Keep 10 toes grinding your chin up. Peace out.